Adam Hewison here, president of INO.com and co-creator of MarketClub. Welcome to your video update for Friday, the 5th of April. Well, the non-farm payroll shocker came out and confidence might be running out in the U.S. economy. Finally, people are saying, does the emperor have any clothes? And I think that's a remarkable event to be happening right now. So let's go right to the stocks. We've had some signals already on these stocks. And on the indices, the first one we're going to look at is the S&P 500. And you can see it's still technically positive. However, it has pulled back to the lower end of the range on the Donchian trade channel. We don't have our weekly in yet, and that's the one we're looking for. If we see the market go below the 1439 level, I think that's going to 1539. I beg your pardon. That's going to be the signal to basically exit and head for the hills for intermediate term traders, and that's definitely a key to look at. So on the euro, which took a big jump today on short covering because of the dollar, got whacked because of the non-farm payrolls, but nonetheless it's still in a downward trend. You may want to just be out of the market for a while and wait till it turns around back down, but it's in an overbought condition. Given anything to do, I'd rather sell it between 130 and 131. And I think it's going to go back down. I think the market can and will move lower. Technically, all of our trade triangles, the monthly and the weekly, still negative on this market. On the Dow, this has been the strong market, of course. But I think if we see the market go below 14,400, that's going to be a sign that things aren't looking too good for this market. And I think, generally speaking, we've lost momentum. You can see right here on the momentum indicator. These are daily charts, but if you look at the weekly chart, it looks even worse. If you put a weekly chart up, you can see this is a negative, but certainly below 14.4, this market's going to have trouble. And I think they're doing everything they can to hold it up, the Fed, at this point in time. On the gold market, you can see for the week we're down, generally speaking, but we did find support right around the 1460, 1430 level, and this is going to be an important level for this market to hold. I think we're going to continue to move sideways as we have done for the last 6 or 7 weeks. I don't see any reason to jump into this market right now. I want to see our trade triangles, right? These trade triangles right here, turn green. When that happens, I want to be bullish on gold. But right now, everybody's been trying to pick a bottom in this market, and they have not succeeded because it keeps going down. You can see the rhythm of this market very clearly, and it's going just like this. You can see this is a weekly chart. Boom, 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 boom. The question is it going to have another leg down? I would not be surprised to see that happen. We have been oversold for the last several weeks, but that continues to be a negative on this market. It closed at these levels. This would be, I think, below 1570 would be a new low close for this market on a weekly basis. So let's clear the screen and look at our next chart. Next chart we're looking at is the NASDAQ. This already has given a sell signal. This is, as we've said all along, the NASDAQ is the weak sister of the three currencies. We're looking 3 indices rather. We're looking for this market to go lower. It's obviously been influenced by Apple Computer, which is under a lot of pressure, has been under a lot of pressure, continues to be under pressure. And I think with the Facebook phone coming out yesterday, we've seen some pressure on Apple today. So let's go to the next market, and that's Facebook. Facebook has put its best week in about 3 weeks. But here's the key thing. We actually have a negative on this last week at 25.15 or 27.48. I would be more inclined to look for a place to sell this market than to go long. We've seen a pullback here, a little rally. Let's just put our Fibonacci tool in here and see where this is going. So there we are. It's definitely up over the 27.20 level. That's a 61.8% retracement. It's overbought. I'd rather sell it here than buy it based on our trade triangle technology, which is negative. You can see the monthly and the weekly is still down. The weekly from 28.74. So somewhere around here, I would be a seller as opposed to a buyer in this market. Crude oil still under attack here. Longer term, it's still positive, though. That's the key thing. It's still held this 92 level, which is a key level to hold. We're at the bottom end of the trading range on the Donchian trade channel, and we're also getting oversold. So I would expect we'll see something more happen in this market, but we've seen a lot of liquidation right across all the markets. So let's go to our next market, and this is the dollar-yen relationship. We talked about this on CNBC Asia last night. We've talked about it before, liking this cross, and this is new highs for the cross. And if we scope this out, you can see it can go a lot further. We're certainly looking for it to go to the 100 level, even the 105 level, but 100 is our first target zone. We're currently trading at 96.96, so we like this trade, and we expect any kind of weakness in this market to be met with good support. So let's just go to our next market, and this is Uniphase. Now, Uniphase is interesting because we had a signal today. If I just go to our, you can see the two stocks will be covering Uniphase and Cisco Systems. Now, both of them gave major sell signals today with the yellow square around the red triangle. You can see both of them. So let's take a look at Uniphase first of all, and let's get scoped in. And you can see there's the market. Bingo, we've gone below there. There's the signal right there. And that came in at 12.38. Currently trading at 12.71. Not unusual for a market to hit a signal and then rally a little bit, but certainly this level here, this is the area, previous low, 12.38, and today we got down to 12.36. So this is definitely a key area, this level, just right around these levels right here, these lows here and here. So if we go below the 12.36 level, that's going to spell a lot of trouble for this market. So nonetheless, you had remember those pivot points we talked about? There's the pivot point. So from here, this level here, up to here, 1550. So take 1550 away from, looks like 14. It gives you 1250. So I think we got very close to that and sort of may have satisfied that downside count. So let's just clear that screen off and go to our next market. Okay, Cisco. This is another signal on Cisco. This is the lowest Cisco has been actually since for the year, and it does not look that great. It looks like it's turned around and made that sort of big top that we like to see in these markets. I would say I would want to be, if anything, I'd want to be short Cisco right now, even though that's maybe against popular belief. But nonetheless, signals are signals, and you can't ignore them. So I would say signals. If it doesn't go over the 2150 level, it's 2050. So there's $1 risk on the upside. And you've got maybe a couple of dollars on the downside. Not a great trade, but it's something to look at. Anyway, that's a signal that came today with our trade triangles. Hey, this is Adam Hewison. Big day today because of the non-farm payrolls. How we close today is going to be very, very important. My guess is we're going to see further weakness later in the day. So stay tuned for that. Have a great weekend, and I'll see you next week on Market Club. Thanks for stopping by.